really critical and essential for dealing with hard to value assets. This is a power that the grantor can't retain that ability. In fact, if the grantor is the trustee and the trust has hard to value assets, then if it's a unit trust where you need a value determined each year to determine the payout, the grantor / trustee would have to get an independent qualified appraisal by a qualified appraiser for that hard to value asset each and every year in order to determine the fair market value of the assets each year. If, on the other hand, you transferred in Blackacre that we talked about earlier, and you got the appraisal because you needed to do it initially to get your charitable income tax deduction, but you were not, the grantor was not the trustee, or there was an independent special trustee named to deal with valuing hard to value assets, then the independent special trustee does not need to seek out a qualified appraisal for purposes of determining the value of that hard to value asset with respect to determining the annual payout amount based on the fixed percentage. The definitions of independent trustee, it's Code Section 674 definition, not related or subordinate, what you're familiar with in the other trusts. And Wealth Docs gives you the ability to name up front the independent special trustee and provide for named successors, or a provision that doesn't name the independent trustee up front in the document, but says that whenever they're needed, then they shall be appointed. You have that option. And then listing the charitable remainder beneficiaries. It's the next option. Do you want to name them or not? And let's say we said yes. Here's how you could do it. And lo and behold, Brown University, Providence, Rhode Island, is now named. And when I look at that, I just, one of the things that happened under my tenure, for those of you maybe in the far northwest corner of the United States may not have followed this so closely, but the great state of the great state of Rhode Island and Plymouth Plantations, which is the formal full name of Rhode Island until about a year and 3/4 ago, changed its name and got rid of the Providence Plantations. So now it's just Rhode Island is Rhode Island, the state of Rhode Island. Brown, formed in 1764, was also Brown University, Providence, Rhode Island, and Providence Plantations as part of its formal name. So we had to go through getting that name changed as well. And it was most complicated for all of our California colleagues. I'm sure you'll appreciate this on this call. One of the most difficult changes we had to deal with, and one of the more expensive ones, was with respect to California, the great state of California, and dealing with our charitable gift annuity registrations. But anyhow, okay. And then let me back up. Set forth the specific restricted purpose, and you see here to establish the Chester A. Arthur Endowment Fund. I'm going to just spend a minute talking about this, and this applies also, though, to outright bequests, outright gifts or bequests in planning that you're drafting for your clients who name a charity where you want it, where they want it to be for a specific purpose within the charity. And this can be a beneficiary designation from a retirement account or in their client's trust. It's important for you to reach out to the charity to make sure that the language that you're using will actually accomplish what your donor wants to have happen whenever that money is received by the institution. And to the extent your donor does not want the charity to know that it's making this revocable provision, you can reach out directly, because sometimes there's magic language and magic words that each institution has to accomplish a specific result. And if it's not worded properly, if your client wanted an endowment set up, so just the income therefrom was used to provide scholarships, if it's not worded properly, it might be an immediate use, be treated as just for general uses and purposes, and then it can be spent based on typically the president's discretion, or it can be for immediate use and not set up a permanent endowment, so it would just be spent down, and when it was spent down, it's gone. So this isn't just in the context at all of charitable remainder trust, but in all of your interactions with charities, to the extent your clients want it to be other than just for the general use of the charity, you're going to want to coordinate just to make sure that they will be happy with what actually happens. Okay, and then you also have, how do you want to define the charities? This is where we started our conversation today. Do you want the qualified organization to include or just be limited to public charities? If you select that option, then what will appear in the document is that the charity has to be 170B1A, 170C, 2055A, and 2522A. That's what gets it to only a public charity. If you check the box or click the bullets for include non-operating private foundations, then instead of all of those code sections, it would just say basically an organization defined in code section 170C. And then, as I mentioned earlier, if you click this box so that it just includes, so it also includes non-operating private foundations, and you name Brown University as the charity, then you would be limited to the deductions based on a private foundation, a non-operating private foundation, notwithstanding that Brown is actually in the document. Right to amend charitable designations include a provision granting the grantor's donors the right to amend the charitable designation, yes or no? And then a power to accelerate. Do you want to include a provision granting the grantors the power to accelerate payment to the charitable remainder trust? So you can do that. You can provide for an early termination or partial acceleration. And there are ways you can do that hardwired into the document. There are also other ways that we may talk about in the last session, even if that language isn't in there, in how you can accomplish that result. Jeffrey asked, can the donor's private family trust company serve as trustee of a CRUT? Yes, they can, because remember, the donors can, but I don't think they're going to meet the qualifications of an independent special trustee. I think they would be treated as a related part. They'd be subordinate. Typically, the way they're structured, they'd be subordinate to the wishes of the donor. The 674 language applies to who can be an independent trustee. No, wait a minute. On how the trustee fee, I think this is what Whitney was getting at. Brett asked, how are trustee fees paid? Does it impact the 10% remainder math? No. And they're paid out of the trust to the extent that it's not trusteed by Brown or some other trust company that decides that they want to do that. All right. Well, I was answering questions. Okay. I think I clicked a little bit too far.
David, a clarification came in on the question about the 674 language.
Okay. I'm sorry, not related or subordinate to the trust makers. All right. On a charitable remainder unit trust, you can